Today, let's talk about how to make it in a bear market. Now, forget surviving. Let's talk about how to set yourselves up to be successful next time there is hopefully the next time there is a bull market within the crypto space. What's up, everybody? My name is Rob Paone. I'm the founder of Proof of Talent. And this is, if you've been around for a while, this is going to be a little bit of a throwback Crypto Bobby type video, but I want to talk about how to position yourself to be successful in the situations in which we're seeing right now, which is, I think everybody would agree, the bear market in crypto, the doldrums, the not so fun part, the part where every other fund is blowing up, where exchanges are laying off people, where the golden boy of the crypto industry, or former golden boy, now disgraced golden boy of the crypto industry, was just thrown into cuffs and tossed into a Bahamian jail last night. So I think we're pretty far away from the bull market, but I have a pretty strong opinion that you don't make it in the bull market. You really make it in the bear market. And what you do today, or what you do in the downturns, is how you set yourself up to be successful when things eventually turn around. So I want to talk about what you need to do, or what I think will help you to be successful. And now, I'm not by any stretch an expert when it comes to quote unquote making it. However, I have seen some things in terms of the crypto market. I've also felt some things. And I think that's the most important thing, is that you see a lot that happens in the crypto market, but so much of this stuff is human emotion. And to say that like I haven't felt that human emotion would be the biggest outright lie ever. You feel the elation, you feel the downright despair, you feel everything in between. And so this is from personal experience. This is from having some success in my own. This is from seeing people succeed way more than me. This is from making a lot of mistakes in the process of doing this. So I want to talk about all of that and more in today's video. Now, a quick note, I'm going to talk a little bit about this later, but if you are looking for an opportunity, a job in the crypto market, my company, Proof of Talent, helps people within the crypto market to find employment. We work with 30 plus companies right now across the crypto space, helping them to find full-time employees. The average base salary of somebody placed in 2022 is $195,000. So, some pretty high level and really, really strong opportunities. And that's based, not even including equity or token compensation as well. But let's dive into the discussion now. So one of the most important things that you can do in the bear market is to stay interested. And I'll link to a video I've posted on Twitter before. Icebergy posted on Twitter a few times as well. And it is from Kobe, Crypto Cobain, whatever you want to call him. Jordan, he is a crypto Twitter celebrity, but also an incredibly smart person who has been around in crypto since the very early days and has seen a lot. And he was on his podcast with Ledger, the Up Only podcast, and he talked about the way in which people don't make it, and kind of the psychology of a lot of people who come into crypto and then end up missing out and losing quite a bit. And one of the big things he talked about was staying interested. And I couldn't agree more. And kind of the situation that he talks about is the human mind in a lot of respects. When you're talking about the crypto industry at large and buying these assets and all that type of stuff, the most interesting time is counterintuitively typically the worst time for you to actually be purchasing these assets. And it's, when everything is up 10, 50, 100x, and it's being talked about on CNBC every day and Bloomberg in a positive light, not in a, exchange CEO in handcuffs, but it's being talked about in a positive light. And this is, game-changing technology, and your friends and your cousins are buying new cars and houses and all types of crazy stuff. And you want to be the next one. So you're coming in buying at that inflated valuation. And then all of a sudden, oops, what happens? The crypto market turns down 70, 80%. And you say, all right, well, this sucks. I hate this. I'm going to leave. You sell, you walk away. 3 years later, all of a sudden the market's going up again, going up again, going up again. And the same thing happens. You come back in and you buy at those inflated prices. And that was something that happened to me in 2013 to 2017. So quick personal story and kind of why I've stayed in the industry in the way in which I have was in 2013, December 2013 to be exact. I had a friend like send me an article about Dogecoin, and it was literally the first or second week that Dogecoin was in existence. And I started mining Dogecoin on my laptop and on my computer. And I thought it was like the coolest thing in the world. I bought some Bitcoin. This was December 2013. The price of Bitcoin was maybe $1,000. Then Bitcoin and the entire crypto market went down about 75-80%. Bitcoin stayed at $200 for an extended period of time. And I totally lost interest. I didn't care. I was just like, you know what? This is silly and dumb. And I was just an idiot for thinking that this space is still cool. Well, come 2017, I have a friend reach out again who you knew I used to be into crypto, and we start talking again, and I kind of get back in and kind of buy towards the medium to latter end of 2017, and really missed a lot of the upside that happened in 2016 and 2017. Now, when I missed that upside, and again, in late 2017, early 2018, the market went down 70, 80, 85% for a lot of these assets. What did I do? I said to myself, hey, you know what? This time I'm not going to leave this space because I know how much opportunity cost I missed out on. I personally had a significant length of time where I could have bought Bitcoin at $200, and then that Bitcoin was later worth $20,000. I had an extraordinary amount of time where I could have done that, and I easily could have, at the time, afforded that as well. And I just didn't do that because I lost interest. And so this time around, I said, hey, I don't want that to happen. So that was a lesson that I learned, and I learned it the hard way, I suppose. But because I learned it the hard way in the 2018, 2019 bear market in crypto, I stayed interested. I ended up getting a job in the crypto space. I worked for a project, AirSwap, Fluidity, and I, worked Monday through Friday, normal job. And because I was interested in the industry, because I was working full time in the space, because I was consuming the content, because I was paying attention to what was going on, I was able to position myself pretty early into the DeFi space. I was working kind of in the DeFi space as well, but I was able to position myself like financially into the DeFi space. I was able to utilize a lot of the protocols like Uniswap and Compound and some of these other ones very early on, position myself to receive things like airdrops and all that type of stuff. And in 2020 and 2021, I saw a pretty significant financial benefit from doing so, which was great. So that's one of the things I think you really need to stay interested in the industry in any way, shape, or form that you can, because when you are able to find that interest level, you are able to kind of position yourself accordingly in the not so fun times financially to be successful on a bounce back. Now, the second thing that I think, and this is kind of like 2A, 2B, but the second way, in my opinion, to really kind of make it in the bear market is A, you need a job. I personally think, or it's very beneficial to have a job in the bear market. And B, preferably it is a job within the crypto industry, preferably. Although that's not always possible for everybody, nor is that a realistic situation for everybody. But let me break that down and talk about why I think that's the case. Well, number one, I think having a job, having a source of income, whatever it may be, having that source of income will hopefully allow you to continue to dollar cost average into the crypto market at advantageous prices in which you would not have had access to 6 months, 12 months ago, 2 years ago, whatever it was. When you're able to buy when things are down 75, 85, 90%, that is a much better time to be buying. It feels counterintuitive because you don't want to do it. You don't want to buy when everybody is calling the industry a joke. But if you have that financial situation, if you have the a continuous source of income through a job, preferably, then whether you're taking a percent of your salary or multiple percent, whatever it might be, and putting that into the crypto market on a consistent basis, I think you are going to be much safer and more successful in doing so. Now, the 2A to the 2B portion, and why I think having a job in the crypto market, I talked about this a little bit earlier, but why I think having a job in the crypto market is helpful, or in the crypto industry, the Web3 blockchain industry, whatever you want to call it, why I think that is helpful is because you're able to build out a network and work within the industry on a 24/7 basis. And so I think that because when you work at a company in the crypto space, you typically are able to have conversations with whether it's integration partners or you see other companies or you see other projects that are having success. You're just kind of at the ground floor and you get to see and hear things that you may not see if you were working outside of the industry. And I think that that is really, really beneficial because you are able to, again, see where trends might be going and identify those. And if you're able to do that relatively early on in a bear market, it sets you up for a great deal of success. So going back to that, I think having a job in which you can take some portion of your compensation and put it into investments on a continuous basis, that is going to be very helpful for you. And then also, in addition, if you can work in the crypto space, if you are working in the crypto space, I think that's great. But if you are interested and you can do that and you want to do that, I think it's really advantageous, especially in a bear market, because you're going to see and hear those opportunities. And that's not even including or talking about variable compensation at those companies, be it equity on the lower end or getting more realistic valuations and token compensation, whatever that may be. The third thing I'll say about making it in a bear market is just doing the work. So studying, researching, and moving slowly when you do that. I think that there is a tremendous amount of quote unquote alpha in the crypto markets if you simply put in the work. And part of that goes back to the first point of not losing interest. But when you don't lose interest and you maintain that interest and you put in the work to study and to see trends and see new opportunities, that is when you can really, really position yourself greatly for success and to quote unquote make it. And an example that I'll use, and I wasn't even by any stretch like the earliest into DeFi, but there was a whole contingency of or a whole group of people that were very early into DeFi in a few different projects in the heart of the bear market in 2019, in a few different discords, in the synthetic discord, in the synthetics discord, and a couple other ones like that, where they were active, they were paying attention to things that nobody else was paying attention to. And because they were doing that, they were buying certain cryptocurrencies that were down 97% and ended up making 2, 3, 4, 5,000% returns, crazy returns because of that, because they stayed interested, they were studying, they were researching, and they were making moves based upon that. And that could be in anything. I'm not saying it has to be in some micro cap altcoin at the time or anything like that, but if you're into Bitcoin, if you're into Ethereum, whatever your interests are, I think studying that and developing some idea around why you are interested in the space and kind of deeper conviction based upon that, whether you're looking at a Bitcoiner, if you're looking at Lightning, if you're in Ethereum, if you're kind of keeping track of everything that's going on with that, with the multiple kind of layer twos and the roll ups and all those types of things, and the whole sound money movement, the ultrasound money movement, things of that nature. Whatever floats your boat, I think you just want to really dive deeply and try and research that and study that, and then position yourself accordingly based upon what you're finding. I think that's going to do really well for you. And the fourth key to making it in the bear market, in my opinion, is not using leverage. Now, leverage is something that is wildly common in the crypto space. It's something that is always going to be utilized. I'm not going to sit here and be like, every leverage product should be eliminated from the world, because A, I don't think that's realistic, and B, if there's a demand for it, I think there should be a supply for it, and there should be products that meet that demand. That said, I think the average person, I think really any person in general, is better off not using leverage. You're always going to hear stories about people making incredible sums of money and really crushing it with leverage. But I think for every story like that, there's 95 stories where somebody's just lost their shirt with leverage. And if you look at two of the biggest implosions in crypto in the past year, you look at 3 Arrows Capital and you look at Alameda. I mean, there's both some sketchy things going on behind the scenes with both of those, like very sketchy things. That said, one of the big reasons that they both blew up is because they were levered up and the trades went against them. And these were supposed, whether or not they were or not, but these were Ivy League educated individuals that had traditional finance and Wall Street backgrounds that were supposed to be the smartest people in the room and that got their shirts blown off because they were levered up. Now, I think that human nature kind of equalizes everybody, and whether you went to Columbia or MIT or some community college or no college at all, I think human nature kind of levels the playing field a lot because greed is a hell of a drug. That said, if those individuals can't manage their risk properly and end up blowing multi-billions of dollars because they were too levered up, doesn't give me a lot of hope for myself to do that properly. So because of that, I don't use leverage, and I think the average person should not use leverage. And B, I think that there is enough upside when you're talking about just the spot assets or just the unlevered assets, the native assets within the crypto market. There is enough upside there where you don't need to use leverage. You're just being crazy at that point in time. And I think it's crazy on the upside and it's crazy on the downside, but the volatility of the crypto markets make it such that using leverage is usually a very dangerous thing because it is very easy for a cryptocurrency to drop 20, 30, 50% in a day. And you could think you're on a safe form of leverage. You could think, 4x leverage, it's perfectly safe. And then all of a sudden, some crazy thing happens. FTX goes insolvent, 3AC happens, Terra blows up, whatever it is. And all of a sudden, your favorite coin that you're levered up on is down 35% in a day, and you're screwed. So I would just say that not using leverage is really, really important for the average person because a key to making it is not losing everything. And one of the easiest ways to lose everything is to lever up. So A, I wouldn't lever up, and also B, like I said, there is enough upside in a lot of these markets to make 10, 50, 100x returns in a lot of cases, especially when things are down 90%. There is a significant amount of upside there left without having to take on that additional risk of what leverage provides. So to summarize, the 4 things I think that are really important to making it in a bear market is number 1, staying interested in the industry. Again, I'll post a link to what Kobe said. It is a lot more eloquent than I probably put it. He is a much better speaker than I am. So I'll post a link to that. If you want to watch it, you definitely should, because he just knocks that speech out of the park. And that's from like a year and a half ago when Bitcoin was at $60,000. And the thesis is really played out perfectly. So again, I'll put a link to that below. Number 2, I think having a source of income in which you don't have to rely on making money in crypto to basically pay your bills, but having a source of income to which you can take a portion of that income and, put a little bit into whatever cryptocurrency you like every 2 weeks, once a month, whatever it is. Just having a little bit, putting it into the industry when you can, I think will do you wonders. And as a caveat to that too, or as kind of a byproduct, if you have the capacity, if you have the interest, I think working full-time in the industry, for a company, starting your own company, whatever it might be, I think working full-time in the industry is an even kind of bigger value add there. It's an even bigger step up because you're able to really keep tabs on what's happening in a way in which you wouldn't do if you had to be spending, 40 hours a week doing something else. So that's number 2. The third thing is really just to dive deep and study and research on the topics that interest you the most and create theses and information around that. I think that not only just like staying interested in the industry, but diving deep is going to help you. Building a community around that interest is really important. And then slowly position yourself to be successful. Like there is, especially in times like right now, I would love to say we're going to see a sick V-shaped recovery and be back at all-time highs tomorrow, but that is probably not the case. So you can typically take your time, slowly position, come up with that information, the research that you'd like, and you'll be successful whether you do something tomorrow, a week from now, or a few months from now, most likely. And the last thing I'll say is just don't use leverage. Again, there are always going to be people that are going to use leverage. If you do, you're probably going to make some money on it. Then you're probably going to blow up, and that's just the way she goes. But I would recommend, if you are really interested in making it and keeping it, don't use leverage, because at some point in time, it's going to catch up to you in a way in which you were not expecting. It's been the downfall of almost every big person that's had a downfall in the crypto industry. So I would say to stick away from leverage as well. Hopefully this video is helpful and interesting. If you like this type of content, I would love to hear it because I can make more like this. Thank you so much for the time. And again, Rob from Proof of Talent, if you are interested in an opportunity within the crypto industry, I'll put a link below so you can send in your resume to us at Proof of Talent. Or if you're hiring for a company within the crypto space, feel free to reach out as well. Thank you so much for the time. See you next time.